Hey everyone, welcome back to Corporate Decoder. Today we are going to be looking at Electronic Arts, the video game giant. We will be decoding their latest financial report. Get ready because there is talk of dividends and maybe, just maybe, a financial power-up or two. Ready to level up your knowledge about publicly traded companies? Join our Discord community using the link in the description below. So this isn't their big annual report. This is a Form 8K which companies file when something important happens that investors should know about quickly. Think of it as an emergency broadcast system for the stock market. The date on this report is May 1, 2025. Alright, let's get right to it. EA put out a press release sharing how they did in their fourth fiscal quarter and the whole year ending in March. You can find the whole press release as an exhibit if you want all the nitty-gritty details. Here is the main point. On May 2025, EA announced a cash dividend. That means if you own EA stock, you will get $0.99 for every share you own. The money is scheduled to be paid on June 18th for every share you own. The money is scheduled to be paid on June 18th, for the 25. To all the people who own the stock on May 28, 2025, this is called the record date. That's pretty much the whole filing. However, that press release they mentioned is definitely worth a look. Let's dive into the press release. EA is highlighting some good news for the full year. Their net bookings, which is kind of like revenue, but with some accounting adjustments, were $7 billion. They beat their own expectations. They seem pretty happy about that. Operating income is a key measure of how profitable a company is from its core business. EA's operating income was $1.25 billion. That's a number that tells us how well they're controlling costs while making money. They made $3.47 per share, which is important to consider. The earnings per share is basically how much money the company made for each share of stock. This number helps investors understand how profitable the company is on a per share basis. Looking at just the last quarter, their net bookings were $1.67 billion. Not bad, but let's look at how the income was to see if it's all roses. Their operating income for the fourth quarter was $326 million, and the earnings per share for the quarter was 1.29 cents. It sounds like per share Q4 was a solid earner for the company. Here's the thing, a good war chest is a sign of a company that can play offensively. They ended the quarter with $341 billion in cash and short-term investments. That gives them a lot of flexibility to invest in new games, buy other companies, or just keep things running smoothly. This basically means they're bringing in more cash than they're spending. That's a sign of a healthy business. EA is returning value to its stockholders, giving back $1.6 billion through stock repurchases and dividends. Stock buybacks can increase earnings per share by reducing the number of shares outstanding. Dividends provide a direct cash return to investors, attracting those seeking steady income. Both strategies show confidence in the company's financial health and commitment to rewarding shareholders. Looking ahead, EA expects their net bookings for the next fiscal year to be between $7.3 billion and $7.7 billion. This is their guidance, meaning what they expect to achieve. If they hit the higher end of that range, things will be fantastic, but it's important to understand that this is only a forecast. Operating cash flow is expected to be between $125 billion and $1.9 billion, which shows they expect to still bring in cash. They estimate their average number of shares to be 259 million. That's important for calculating earnings per share in the future. EA mentions that their results can be affected by changes in currency exchange rates. If the dollar gets stronger, their earnings from other countries get smaller when they are converted back into dollars. They also note that things like how much people are spending and the overall economy can affect their business. If people are worried about money, they might buy fewer video games. So what's the bottom line here? EA seems to be doing pretty well. They're making money, they have a lot of cash, and they're giving some of it back to their shareholders. But they also face some challenges like currency fluctuations and the overall economy. Now let's zoom out and think about what this all means. EA is a big player in the video game industry, and they have a lot of popular games like FIFA, Madden, and Apex Legends. They have been moving more towards digital sales and services, which can be more profitable than selling physical copies of games. However, the video game industry is always changing, and EA faces competition from other big companies like Activision Blizzard and Take-Two Interactive. Looking at the numbers, EA seems to be in a pretty good spot. They are not growing super quickly, but they have a strong core business and plenty of cash to invest in the future. A reasonable target price range would be $130 to $140 based on current performance. Alright, that's our breakdown of EA's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.